Good morning. Can everybody hear me? Yes? Okay. Good morning, everybody. And it's just so wonderful to see people and to interact and to chat. So thank you very much for attending. For the attendees, the sponsors, the presenters, really it's just been a wonderful opportunity for us to host the conference. It was originally destined for May, and of course we had to postpone. But just look, it's just been wonderful. So thank you very much. Just to get back a little bit to, if you don't know who I am, I'm Artemis Galatis, and I'm the General Manager of the association. And Deborah, who is at the registration table, we're both wearing pink. Sanka, so are you. We're both wearing pink, so if you need anything to know about the association, please feel free. Just to tell you a little bit about what we've done in the last 2 years, we've partnered with the University of the Free State Business School, and we're doing a Treasury program consisting of 6 modules. There are some details on the last page of your program and right at the back. So if you'd be interested, we've had 2 very successful events, 2 of them, and very, very well supported and had a lot of positive feedback. So please also just talk to me about that. The journal that you've got on your tables, those are 2021 journals. We're about to publish our 2022 journals, but please feel free. And if ever you'd like to participate and write an article, please do contact us. Our training workshops will continue. We'll be doing Forex and cash management, the usual ones, and we also did one on technical analysis this year. So you will be all on our database, and you will be kept informed. Right, now to today's proceedings. It wouldn't have taken place if it wasn't for Charles Buchanan from Treasury Paradigm, the facilitator, and who sets the theme and helps everybody keep to the topic and make sure that everything is relevant and is of interest to everyone. So Charles, thank you very much. Charles has been very active with ACTSA over all the years, and he was the past chairman. So thanks, Charles. And now he's relocated to Cape Town. And also, a very huge thanks to our board of directors. There are a few here, Trevor from ACI, and they're the ones who spearhead the association and keep us on track and what is relevant to the market, so that whatever ACTSA offers is something that you would all like to enjoy and to learn from it. Now, today, another big thank you to the sponsors, of course. Please do visit the exhibits in the room adjoining here. There's lots to talk about and lots to see. And without them, really, these kind of events aren't always possible. So today, to take us through all the events and all the presentations, I'm very pleased to introduce Samke Mshlongo. Yes, Samke, thank you very, very much for taking up our offer of coming to present. She's very well versed in the financial environment, and she will take you from here. If there's anything else you'd like to discuss, I'm around. Okay, thank you very much, everybody.
Thank you, Artemis, for that official welcome. Good morning, ladies and gentlemen. My name is Samke Mshlongo, and I will be your program director for the day. A little bit about my background. I am an ex-private banker, having spent 7 years helping some of South Africa's wealthiest manage their finances. And of course, I was a banker during Brexit, when every other phone call was asking whether a client should move money and themselves out of the country. And so I do not envy you, ladies and gentlemen, being corporate treasurers in what seems to be a series of once-in-a-lifetime events happening in the same lifetime. You've had the economic crisis, you've had the pandemic, and just as we thought we were coming out of it, you had Putin deciding to bomb his little neighbor and in the process upset supply chains and liquidity around the world. Please do feel free to laugh, contrary to what people think about corporate treasurers. Thank you. Ladies and gentlemen, the theme for today's conference is Innovation in Treasury, the Road Ahead. And it couldn't be a more brave topic, given that there is so much uncertainty in the world today. I mean, look at what has happened in the UK just over the past 2 weeks, where you've had a change in finance minister, a change in prime minister, and of course, seeing that pound go from levels of about 20, 21 to the rand down to about 18. How do you even plan when everything is changing so much? Of course, then you've got the digital transformation happening that is changing how we make payments and what we even consider to be money, where currencies are moving from being backed by reserve banks to being backed by an anonymous programmer out of Japan, or is it California? So, ladies and gentlemen, to kick off our discussions this morning, I'd like to invite Richard Stocken from ACTSA, who is Head of Cash Management, to talk about the South African payments landscape, the changes to how payments are made, and looking at a use case in India about how things are changing. A warm round of applause, please, for Richard.
Thanks, Sanka. Morning, everyone. I think payments are about to undergo a very significant change in South Africa. So the next 5-10 years are going to be a very exciting space for us. I hope that in the next few minutes I can share with you like a feel for what that future might look like, and hopefully also spark some ideas for how you might take advantage of that in your business. We'll get there. Before we look too far forward, just want to take a look a little bit back, see where we are in payments in South Africa at the moment. Start off with how our bog standard EFT payments have grown from around January 2016 to date. You'll see pretty flat growth, quite surprising actually, quite recession-proof, this EFT payment growth, but nothing exceptional. So what you would expect from a very mature, basic electronic funds transfer product. What is more interesting is if we see what is happening when we look at the trend towards real-time payments. So what I've done here, just to convey better the relative difference, is I've normalized the growth to January 2016. And to give you an idea of the scale, in January 2016, for every 100 EFT payments, there was only 3 real-time clearing payments. So very low percentage. But you'll see that has changed very significantly over the last 5 to 6 years. You can see how dramatic the growth in real-time clearing is. As of last month, for every 100 EFT payments, about 33 of those are RTC payments are made. So the growth rate, real-time clearing relative to EFT, is about 11 times. So quite a surprising area of significant growth in payments in South Africa. If we take a look at how transaction values in real-time payments have changed, to give you a feel for what type of transaction this applies to, we'll see that in the first year or so, payment values increased a little bit, but over time they've decreased. So what is happening is that growth of real-time clearing transactions actually driven by a decline in average transaction value. So it'd be interesting to think about what kind of exchange of value is taking place that is real-time and lower value over time. So let's just think about what this means for us. So stating the obvious, but each of these payments represents some form of underlying economic activity. There's some transfer of value in some way. If we just look at this real time though, what is interesting for me about it is that real-time clearing is actually an expensive payment type. It's not a cheap way of making a payment. For us to see growth rates of over 50% year on year of an expensive payment type suggests that there's something about it that is valuable to the person making the payment. They're prepared to pay these high costs for the value they're getting from being able to settle that transaction immediately and not wait overnight for the recipient to receive their value. If we just look last month, over 120 billion rand was cleared through real-time clearing. So it's becoming material. And that growth rate is material. So over 50% year-on-year growth. There's some part of our economy that is growing at a rate that is significantly different from what we see in our traditional payment types. So that in its own is quite interesting. I'll share with you a little bit later what we are seeing some businesses doing that is helping drive this growth. But as we think about the next 5 to 10 years for payments in South Africa, what do you think would happen if we were to make a real-time payment cheaper and easier to make? So you've probably got an intuitive sense of what might happen. But why this is an important question for us to ask today is that industry is busy working on a new payment type, which is rapid payments. So some of the banks already are completing their early testing, will be piloting early next year. And rapid payments is designed to make it even easier to make a real-time payment than it currently is through real-time clearing. So attributes are, for example, it's instant, the same as real-time clearing, but it's got a couple of other attributes to make it easier to use than a real-time clearing transaction. One is this idea of a proxy. So a proxy means that I will be able to pay you not knowing your account details, but just having your proxy. So you'll be able to register your proxy with your bank, share with me your proxy, I'll be able to pay you using the proxy. So it reduces the friction to making a payment, making it easier. Request to pay is another feature of the product, which will allow someone to initiate a request to someone else to pay them. And on their app, they'll just be able to make the approval of that request to pay. So rapid payments is designed to make it easier to make a payment than our current electronic payment mechanisms. And a big driver for this payment type is also that it needs to be significantly cheaper to drive widespread adoption. This is part of the Reserve Bank's overall vision for payments in South Africa, and to make electronic means of payments more suitable for the broader economy. In particular, to start to offer a viable alternative, digital alternative to physical cash. So that's the context in which rapid payments appears. But it's still quite difficult to imagine what this might do for our economy and for how payments are conducted in South Africa. So I thought it might be useful to take a look at another market where this type of payment already exists. And one market, for example, is India. They have a product they called UPI, Unified Payment Interface. And if you look at the attributes of India's UPI and you compare it to the attributes of rapid payments in South Africa, you'll see that they are almost identical. And that's not a coincidence, it's not an accident, it's by design. The rapid payments product type has been designed based on experience in other countries. Not only in India, but other markets that have successfully driven the adoption of this type of payment. So there's a reference that we can take a look at and say, well, what happened in India? And maybe that'll give us some clues as to what we might expect in the coming years for South Africa. So these are how UPI volumes have grown in India, also from around 2006. The lower line there is the real-time clearing equivalent. So this is how their rapid payments have grown relative to real-time clearing transactions. You can see this is an order of magnitude change in payment volumes. I can very easily imagine a future out 5 years where our rapid payment volumes are of the order of 10 times what we are seeing from either real-time clearing or EFT. These volumes here are significantly more than 10 times. Our South African market obviously is different from India, right? The Indian context is different. They had very strong central bank drive to demonetization that helped adoption of this payment type. We can't predict how this rapid payments might be adopted in South Africa, but indications are that it has potential to have a significant impact. Now, when we look at these payment types and say, well, I'm a business and this type of payment is very low value and is what we probably call a retail payment. They person to person. It's 20 Rand or 50 Rand for pocket money, or in India it's paying for a tuk-tuk or a street vendor. So it's not traditional payment type that we would see in corporates. So the impact it has on corporate is going to be a little bit different to what you see here. However, if we think of our stakeholder base becoming very comfortable with receiving value immediately, comfortable with this type of payment at low cost, that is going to spill over to what they expect of businesses and how they expect to transact with businesses. Excuse me. So there is going to be some impact on businesses, and I think the tricky part is to figure out what does that mean for you? How might this impact your business? How might this impact your employees when you're paying them, or how might it impact your customers or your suppliers? So I'd like then to talk to a little bit of a use case that we're seeing. This is what we are already seeing with a number of our customers in adoption of real-time clearing. So this is a use case that has practical application today for immediate settlement of value, bearing in mind that this is at a high cost as opposed to what we'll see come through in rapid payments. The typical use case is that a customer is interacting with a business purely through a digital channel. So typically it's through both mobile and a web channel. That interaction is fully automated into the business's systems, and as part of that interaction there's a financial settlement that takes place in real time. The banking process is not separate from the interaction that the customer has with the business. It's part of it. The financial settlement takes place as part of the interaction. There isn't some separate process that's spun out to handle banking. So the financial receipt of value takes place while the customer is interacting with the business, fully automated. I know in the next talk you're going to hear more about APIs. I'm going to flag here that we are seeing this use case apply nearly exclusively through API channel. And I'll talk a little bit later about why the API channel is ideally suited to this type of payment and traditional banking mechanisms aren't. So very high growth with a certain type of customer that is growing at well over 50% year on year, tapping into those, actually driving those payments, real-time payment volume growth. They have got applications that they are using to drive their underlying business performance. So let's take a look then at how this starts to change the way that traditional banking is done. If we look at our traditional online and host-to-host banking, you would say, well, online clearly isn't suitable for this type of payment because it's far too manual. So you're not going to handle high volumes of low-value payments through an online channel. It doesn't make sense at all. So you discard that pretty quickly. You'd probably say that I'm familiar with a host-to-host banking where my system delivers my payment instructions to the bank, fully automated. So that's a fully automated system. That sounds appropriate. The difficulty with the host-to-host banking is that it batches up transactions. It doesn't happen real time. There's a delay between the interaction with the customer and the financial settlement of that transaction, which makes host-to-host also inappropriate for a real-time engagement that you want to create with your customer. When we look at APIs, our experience is that it's actually quite a different channel to traditional banking channels. I must admit personally, when our customers started using APIs, I thought it's actually just an alternative to host-to-host. It's just another integration method, but it isn't. The attributes of the API channel is very different from traditional. For one, you are using it to settle real time with your customer. It changes the expectations that customers have around when they receive value. That makes it incredibly time sensitive. If you're processing batch transactions, those batches can take a little bit longer to run when the volumes go up. It's not a big deal. But when volumes go up through an API environment, it slows down the performance of the system. And that performance is critical. So when you're thinking about using API channels and evaluating vendors, you need to think about how do they handle growth and volume, and how does that impact the time sensitivity of this channel. How you make sure that you are going to get a real-time response so that you can conclude the interaction that you're having with your customer. So time sensitivity is very different through an API channel. The way that it handles volumes is very different from traditional banking systems. The support environment is also different. So this is pure IT to IT system. This is not a finance department contacting a banker for support. This is an IT system with a notification that there's a problem that needs to engage with the API vendor immediately, and the two IT teams need to resolve that issue promptly. So the support model is also different from what you might be familiar with. The other thing is that when we start looking at real-time engagement, these real-time engagements are 24/7. This is not banking that is constrained to traditional banking times and cutoff times. If you're interacting with your customer and that customer is interacting with you on a weekend or after business hours, that interaction needs to be real-time at that point in time. So this is not a model that keeps traditional banking hours. This is a 24/7, 365 service. So the service model, what you need from an API provider is different from what you might be familiar with in traditional banking systems. So we've spoken quite a lot, shown numbers and graphs and trends, how payments might change in the future, spoken about the technology to support it and how it is very technical. But I think the heart of this trend towards real-time payments is that what it enables is a better experience to deliver to customers. That real-time experience, that real-time settlement of value is a way to build trust with the customer. It is a very different customer experience that you can create through real-time. So despite all the technology that sits behind it, the purpose of moving towards more real-time payments is because you actually want to create a better experience for your stakeholders, whether it is your customers or suppliers. And that really is the power of moving to this kind of model. I hope that was helpful. Thanks for your time.